Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, August 14th, 2018. So we've got a pretty good bounce today. We were expecting some choppy markets. That's what we've been getting right now. And this is all in the topping process that I'm going to go over tonight. And we're going to have some really massive moves that are going to be coming up. And we already have the dates to expect the first low, and we also have the dates that we're expecting the top. So I'm going to go over everything right now. Let's just go over what we do right here. So what we're looking at is our predictive analytics model. That is when we use time. Those are the dates that Woody puts out from his technical timing indicators. We then use sentiment to confirm the time period. So if Woody's looking for a top on a specific date or a low on a specific date, we typically are going to get some type of sentiment extreme at the top or at the low. And from there we use our technicals to confirm everything. So we have three values to our predictive analytic model, and there's times when they're not all in line, and when that happens, what we typically say is to trade smaller, lower trade size, and lower your expectations. Don't be looking for any home run. And really what you want to do during that time period is just kind of scalp trades if that's what you want to do. If you're looking for a swing trade, you kind of just sit it out and wait for the bigger move to come, because I've said this to members plenty of times. You don't need a whole lot of 100 to 300 point moves, whether it be up or down, per year to have a really good year. And we have one pending right now, and it's going to be exciting. And I've shared with you guys that I think there's going to be a whole lot of money to be made, but right now we're in that chop session and it is coming towards an end. So let's go over what Woody had put out today in the report. And again, I have to keep the dates blacked out because these are big dates that we're looking for, and there's going to be a massive move, and this is what our paying subscribers are for, but you'll get a special offer at the end of the video. So anyway, what we are looking for, the week of, and again, I can't give you the date, were ideal for an interim high and align with the daily high. So what we're really looking for here is the market energy has changed, and that was from the top that took place on Friday, and it will be corrective into, and this is, so we have the two dates that we're looking for a high, and one fell into place on that, and now it may get choppy into the next date, and from there, that is when we're anticipating that it is going to be a longer term top in place, and that is what he's saying down here is no change, interim profiles, near-term profiles, and long-term profiles all are in the process of aligning with a market extreme. Once the interim trend reverses, it will be accompanied by overt technical signal and increased volatility. That is likely already started, but may be slow and two-sided until, and again, that's the top date that he's looking for. Now, the long-term diagnosis is beware that this extreme may even be on the order of a magnitude of a 50 or 60 year extreme. So when you get to those long-term extremes, and these are the cycles that Woody follows, those are huge moves, and that is what he's talking about on it. And that means that the topping may be more torturous, but even more significant. So this is what we're leading into, and what we're watching. And if we take a look at sentiment, when we were up here, everybody was bullish on it. We only had a couple days, and everybody got bearish on the market. And this is what happens when we're at these market tops. It doesn't take a lot for people to switch from bullish to bearish, and that is really what the confirmation is when a top takes place. So we got the 9% that was on Monday, and what I'm going to show you is the regular charts, and what we were seeing is that the 15-minute charts were giving us bullish divergences. We are at support. So our recommendation, the first trade alert that we gave was last week, and that was on on Thursday, and that was a break of the of this right here, the low to 28.54, and it was really, I didn't think it was going to get triggered, and it actually took place on the last 5 minutes of the trading day, and from there we had a huge gap down, and then we came down. But when we were down here, what I had mentioned to them was one, if you're short from up here, you probably want to place your stop at the 28.33 because we have bullish divergences, and we still have a little bit of time before we're expecting that top. So why do you want to try to ride it up all the way back up here if you have some decent gains in place? And that's what we mean by lowering your expectations on, what your trade. This wasn't a swing trade. This was the one that where it found support. We know the bulls are going to try to come up and test this again. We have an open gap at 28.52. That may get closed, but the thing is this, is that I'm even leaving the door open for a new high. And the reason why, this is just from a technical basis, we don't have any bearish divergences in place. We have the open gap at 28.52 and the top is at 28.64. So for here, why not just come up and test it? And that would make us new highs, and that will get everybody really, really bullish on the market, and it's going to fall right in line with, this is the bigger picture. This is the weekly chart, and this is kind of what he's been talking about with the much larger top in place. And this is Elliott wave structure, where you have 1, 2, and then you have 5 waves to make a wave 3. So here you have 1, 2. This is a long wave 3. This lasted from all the way from 2011 into the 2018. From there, we had a quick drop. That was our wave 4, and now we're in the process of making a wave 5. Now, the reason this is important is this, is that there's what's called a failed fifth. So if this was the top, then this is your failed fifth, and what that means is that this wave 3 is in place here. And to put it into perspective, if this was just to do a 38% retracement, we're talking about a move coming all the way down to 2028. So that's almost an 800-point drop. Now, again, that's the bigger picture. If this is what is in play right here, we're going to get a ton of bounces up and down by the time we get here. And that is where sentiment and Woody's turn dates come in, because you're able to trade both sides. This call is not just for a move down on it. This is the ultimate going to be the trend. But what will happen is there's going to be a whole bunch of moves in between that, and this is a longer term time period, because Woody had already put down when he's expecting the low on this. So we know what's taking place, and it's this is just a bigger picture to see what's going on. So right now, what you do is you just narrow in, and if once that move starts, you're going to know either when to cover shorts and look to short bounces, or even take moves on the upside on the bounce. But you just be quick on that. But the ultimate move is going to be to the downside, and we're not sure if it started here or not. And the reason why I said that was we don't have any bearish divergences, and we have an open gap. So my guess is they're going to come up and do this. But if they come down and start taking out lows, then the move probably started, and from there, then these little short-term bottom dates or top dates that Woody puts out will be followed by extreme bullish or bearish sentiment. From there, you can take a scalp trade either long or short, but you just know the overall trend is going to be to the downside once it starts. So on the upside, what you really want to look for, the bulls need to get it through to 28.47. There's the gap at 28.52. If they get through that, then they're testing these highs, and like I said, most likely testing this wedge again right here. And what the bears have to do is quite simple. They need to get it through this support level right here. If they do that, there's going to be a very, very quick reaction trade down to 28.11, and most likely testing this 27.96 level. From there, I think there will be some buyers stepping in. The reason why, this is a bull bear line. They will come in and try to put it up, and then what you want to keep an eye on is what happens at resistance. If they get held down, then it accelerates more to the downside, and this is how you have a changing of a guard from a bull market, and not even going to say a bear market, but a big move to the downside, because the thing is that even looking at this bigger picture move, once this wave 4 completes, guess what? There's a wave 5 that's making new all-time highs. So this is not a bear market. We're crashing to nothing type thing. This is your normal pullback from a move that started in 2009 and is going to top out in the could be in the coming weeks. We'll again, our members know the date on that, and from that's where we're anticipating this move, and we already know that the low is anticipated in sometime in 2020. I'll even give you that information. But once this low is made, there's going to be a wave 5 that's going to probably take the S&P up to 5,000. I know that may sound crazy, but the next move to the upside could be pretty big on that, and that's really what we're looking for. But right now, what's in place is this wave 5 of 3, and anybody that's going to be buying up here and looking, and we could even go to 2,900. That is not out of the question at all. But the thing is that once this does complete, then we get that larger move to the downside. And if you don't know when to expect it, and you don't know if sentiment is confirming it, and you're probably going to get caught buying. And I talked to a hedge fund friend of mine, and he asked what we were doing on, what he was anticipating, and I gave him my answer, and he said, all right, he goes, then I'm kind of going to be cashing out, because he didn't believe what I said back in February, and he said he's actually just getting back to even right now, and this is why. He was on the side that we were heading higher and got trapped in this, and right now he's back to even, and unfortunately, the next move, these people aren't going to get a move, aren't going to be able to get a chance to get back to even. So we have some very, very important dates that are approaching. Again, I put a special out. We're probably going to be the one that we're going to be running with, but we're going to have limited amount of people that are going to be joining us with this until that special is going to be removed. So with that, have a great night, and I'll talk to you guys next week.